Hello everyone, my name's Holly Mackay. I'm Managing Director of the Platforum. I'm joined today by Paul Boston, who's Sales Director of Novia. Hi Paul,
Hi, Holly.
thanks for joining us. Paul, in the news recently you can't move but for hearing about price, whether it's fund managers or platforms, and everyone's talking about margin pressure, anticipating a race to the bottom. You want to talk today about kind of bringing the focus back to value, about how platforms can be more for advisors than just a transactional bit of kit. You wanted to talk about three things. I mean, the first thing is cash flow modelling and how platforms can support that.
Yes, I mean, the first thing I would say about pricing, Holly, is it's a perfectly legitimate way to do business, and it certainly helps you get traction. The challenge that you have as a business is how you are profitable and how you are able to have sufficient money to invest in your proposition going forward. So that's the challenge that we all face. Now, in terms of the investment proposition going forward, there are a number of areas where I think we add significant value to the advisor-client relationship. Now, when you look at what a client values in the relationship with the advisor, and all of the research work that's been done leads you to believe that it's things like planning and objective setting, it's reviewing, it's reassurance. And interestingly enough, the thing that comes out as something that's not of particular interest is in them choosing the right investment funds. They want good investment return, but choosing the right investment funds, or comparing illustrations. Now, one of the things that we know at a high level has taken off is cash flow modelling, and Truth and Voyant have been very successful at what they do, and the reports that they produce are inspiring. I mean, they're absolutely fantastic reports. One of the issues that we have coming back to us, though, we get fed back to us by advisors, is that it's incredibly time consuming to get to those reports and those inspiring outputs. So we've introduced some light touch cash flow modelling software where it's integrated into the wrap, so that it becomes incredibly easy. It takes about 5 minutes, in actual fact, to get to these outputs.
And that's your own software you've built internally?
It's our own software. And it's really there to help the advisors with their clients, objective set, planning, and allows the clients, with the look of a report, to see exactly where they are in terms of the track that they're running on.
Okay.
So
another thing you've done is we wanted to talk about CGT reports, and you have a view that perhaps all allowances are not being used as efficiently as they might be.
Yeah, one of the questions that we regularly ask advisors is how they use their client CGT allowance, and what you very quickly learn is it's incredibly hard to access the data to be able to max out on that allowance, and often it goes unused. Now, when you translate this back in terms of cost terms, if you're going back to that whole pricing thing, when you translate that back in cost terms, the difference between using a CGT allowance and not using a CGT allowance for a client who invests £250,000 at 5% growth over 10 years equates back to 100 basis points of charge. So whilst the focus is on the administration system cutting its price maybe 5-10 basis points, what's actually happening is that HMRC are receiving 100 basis points unnecessarily because the CGT allowance in a large number of instances is not being used. So one of the things that we were really keen to do was get a CGT tool that actually produced an unrealised gain report so the advisor could see exactly where to harvest the gains for his client and max out on that allowance. Now, I am a client myself. I know that one of the things that I'm happy to pay a fee for is an advisor helping me to use my tax allowances.
Okay. Another phenomenon we've seen, and Novia have long championed DFMs on platform, the use of model portfolios. We've seen incredible growth in model portfolios being used by advisors. Can you share with us how you're seeing that on Novia?
Yes, certainly the new flows of money are really being driven towards model portfolios. So we're up at 90% of our new business being run through model portfolios. Okay. Of which touching 70% is now being outsourced to discretionary fund managers to run those models. So what's absolutely critical in terms of helping the advisor reduce his cost of production, i.e. his cost of what it takes to produce that client proposition, is to have an administration system, is to have technology that really takes the load on those model portfolios. And we introduced Model Portfolio Manager, which really is a very light touch way of ensuring the models are kept in line with today's best thinking, and ensuring that the wrong assets don't creep into the wrong wrappers. One of the things that we've also seen happening, because with that benefit comes a very real risk as well. One of the things that we've seen is advisors are starting to re-register assets, and because of the length of time it takes to actually re-register the assets, often these investments slip through the cracks, and a client ends up paying for a model portfolio proposition, but remaining in the original assets that have been re-registered because they've come across weeks after the client's been actively involved.
And what's
with the
causing
advisor.
that delay?
Well, I think we all know that, don't we? We need to have, it needs to be on an electronic basis, and we're investing heavily into a system where it becomes straight through. So one of the problems is that whilst we might have these engines that enable electronic re-registration, it still becomes a manual input at the product provider's end, which of course increases their production costs, and it comes back to this whole profitability and sustainability thing with reducing margins. On the model portfolio side, just going back to the model portfolios, one of the things that's absolutely critical for an advisor is to be able to get reports which allow him to see which clients are in model portfolios, but just as importantly, which clients aren't in model portfolios, because that's an early warning sign as to whether clients are paying for something they're not actually receiving. And we know the FCA are going to be very hot on that.
Yeah. We talked about three things which I guess evidence value above and beyond just purely looking at price. One of the other things when we're talking about platform selection with advisors we hear about and get questions about is sustainability. And there does tend to be a correlation or a perceived correlation between the size of the platform and sustainability. Novia has about 2 billion assets on the platform, one of the smaller wrap platforms out there. What's your take when you hear that perception of correlation between size, stability?
Well, our view has always been right from the very beginning. If it costs us money to write £1 of business, why would we want to write 1 million?
Yeah.
So the number one thing is actually getting a business that's scalable, and we've invested again heavily in technology to make sure that business is scalable. We now are up at 2 billion of assets, as you say. The assets on the platform are growing significantly. So in July we'll be touching £100 million of new money coming onto the wrap, and we're tracking a £2 million profit this year. So I think what we've really managed to do is introduce a system that is highly scalable, and it means that the cost base doesn't increase in line with your assets. Therefore, going forward, we will be profitable, and we will have sufficient money to invest in the proposition to keep it at the cutting edge.
Okay. Well, Paul, thank you for coming to talk to me today, and good luck, and let us know when you hit that 2 million figure.
Thanks, Holly.
Okay,
Cheers. Thanks.
pleasure.
Bye.